Hi traders and welcome to the Technical Analysis Market Watch on Friday the 23rd of May. So I've seen some really good action this week and a bit of a pullback in the key indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and we can see that we've had a very quiet week in terms of movement. The restricted range of the moves of this week have been very tight, and we've seen a little bit of that recently, basically over the last month and a half actually. And you can see the 20 moving average is still propping it up. This is a very heavy support level around that 64-cent mark for the Aussie. So realistically, it doesn't look that weak though, and I think that's the important part, that the support actually is holding up here. You can see that we can have a very strong role reversal area here with the 20 moving average holding up the price, and it's been doing that. It's one of the most tested areas in recent time on the Aussie USD. Actually, you can see literally all but about 5 candles over the last month and a half have actually interacted with this level at some point. So very important. That goes without saying. If we get a bit of a push up from here, we haven't had any lead whatsoever this week. You can see that we've had a very quiet week in terms of movement. So we're really expecting that support to probably hold, and if we do get any resemblance of a higher low on a smaller time frame, we'll look for a move up to around that 65-cent mark. That would be the first target at the top of this range here. And that would be the initial take profit. If we get, I wouldn't be looking any longer than that until we actually get a daily close above it. I could probably see it getting up there and probably failing to go through on the first touch anyway. If we do break through the 20 moving average and this support zone though, that's a different story altogether. And then I think we'd be aiming for the middle of this channel where we know there is resistance as well, and that's around that sort of 63-cent mark. We're holding our boundaries at the 100-point moves on the Aussie, so we'll just respect those levels. But let's just see a little move up on a smaller time frame and aim for the 65, a breakdown of that 20 moving average, and we aim for the middle at around that 63-cent mark. So pretty straightforward on the Aussie. All right, we'll move over to the US dollar CAD, and we can see that this week has been a reasonably soft week. You can see the last few days have been definitely weaker. 2 days, the last previous session did nothing. It was very low volume and didn't do very much at all. And there is a bit of a support zone here at around that sort of 138.50. I will draw it for you because I think it's important. You can see that we've got resistance at that point there. We've got a little bit of support around that level there, but just as importantly, we've got a lot of resistance through this area here. It did kick back. It pushed back 30 points from that level, but it is trading under the 20 moving average again on the daily. So we need to be mindful of that, that this weakness could continue. If we see a series of lower highs and lower lows that break past this boundary here at around that 138.50, I'd be looking at short trades up to around that 137.80 at the next support zone, which we know is there. If we see a bit of a bounce up from this level and we start to see a series of higher highs and on the smaller time frame, I'd be looking at a move back up to around that 139 to 139.20 and around the moving average as well. So that would be pulling up the CAD, but we have seen a bit of weakness this week. So just be mindful though, there is a little bit of support right where we are right now. Okay, over to the US dollar yen. And again, this has been another one that's been certainly weak. This the price movements have been very steadfast on their move down. There is support where it's landed at 144. There's no problems about that. We can see here it's rebounded very heavily at that point there and there, and it found resistance there, and it found resistance here as well. So it's found support where it needed to find support, but each swing has been bigger and bigger. You can see each one of them has been more exaggerated. Even on the way up, it came down even more. Look, it's way past it's probably a 76% pullback of a fib. So realistically, it's a very heavy pullback, and that does worry me a little bit. If there wasn't as much support here through this area here, I'd be a little bit more down in my assessment of it. But I think if we find support here, it needs to be trading above the 20 moving average on the daily for mine. So above the 144.80 to 90 area. If the daily closes above there, I'd be a little bit more confident that we might see a decent move back up to around that 146.80. But if we could see continued weakness and we start to trend lower on the smaller time frames and we start to see a series of lower highs and lower lows, I'd be looking at moving down to that 141.80 as the target on the yen. So we're getting some good moves, but it does look a little bit weak. It is at support at the moment though. All right, over to the dollar index, and this has been an interesting one, no doubt. Look, it's been weak at the start of this trading week, no question about that. It's trying to rebound a little bit, but the indices have been a little bit soft, so I'm not really surprised to see this a bit stagnant in the last couple of days, but it is definitely at a do or die level, and we've been saying that a bit for the dollar index, but it hasn't really moved, and it's attempted to go higher and obviously failed. This is a very, very important zone for it. There's no question about that. It needs to get itself back up above that 20 moving average and the 100 level very, very quickly for mine, because the longer it stays down here underneath that level, I think the more susceptible it will be for another move down lower. The buyers need to kick in and push the dollar strength up. And realistically, I wouldn't really look at long opportunities on this until it is actually trading above that 20 moving average again on the daily. So if the daily gets up there and trades above the 20 moving average, then I'd be starting to look at moves back up to the 101.80 to 102 level that we know has been very solid for us. If we don't get past that 20 moving average and it starts to roll over again, I'd be looking at that low 98s for the move down on the dollar index. But of course, the euro is the one that you're going to trade in any instance anyway. And realistically, it's doing the same thing in inverse, of course, trading above the 20 moving average and looking like it wants to go longer. We've got a little series of higher highs and higher lows here on the daily. It's pretty straightforward. I would be looking for moves up to that 114 as the target. So if we see a series of higher highs and higher lows on a 15-minute chart or a 1-hour chart, and they're pulling back to the 20 moving average, we know that works. I mean, the dollar index and the euro work very well in sync with moving averages. So I'd like to see a kick off this moving average and push up to that 114, but you need a 1 hour or 15-minute swing. There's no question about that. It is a little bit quiet over the last little trading period, so just wait for a little bit of momentum to kick in. If we see a break below the 20 moving average on the daily, I'd be starting to target this level here, probably around that 112 as the main target. This is where the heavy resistance was previously, and that would be the best place to be aiming for on the euro. So it's patterning up. There's no question about that. But a lot of this is based on the dollar strength, of course. It plays such a significant role in the movement of the euro. So really, we're going to be dictated to a bit by the dollar index. All right, and on to the S&P 500, and we can see here it's been very weak over the last, basically this whole week has been soft. You can see that the softening didn't quite reach 6,000, but the weakness kicked in. And we saw a nothing sort of day yesterday, and we're trading a little bit lower in this Asian session at the moment. Really, we're going to come down to where the right about here around that sort of 58.50. We know that there is support. Okay, like we can see, I'll pop a line there. You can see we've got very heavy resistance through there, very heavy support through there. That makes it a very key role reversal zone. There's no question about that. Okay, so realistically, what we were looking for is a rebound from here. If we see a series of higher highs and higher lows on a smaller time frame, like a 15-minute chart or a 1-hour chart, we would be looking for the previous highs and at the 6,000 as the target, especially if it starts doing it early in the week around the Monday session. We would want to be looking for that move up to around 6,000. But if we're trading below this level on Monday and we're looking like significantly lower high and lower lows on a 15-minute chart, so, and by that I mean trading anywhere, if the daily's trading anywhere in the low 58s, we'd be looking for targets around that 20 moving average and around that 57.50, which would be the next target. 57.50 and 56.50 are two very, very important targets on the S&P 500. So both of those we will be aiming for if we see weakness, especially if it's trading underneath the 58.50 on Monday. So really that's going to dictate which way we're going to go on the S&P 500. But either way, I think that it's at a very key level now, and with an unbiased lens, I think we can trade both directions confidently, but keep your trading obviously relatively short term on this one because it is still fairly volatile. So I hope you've had a great week's trading. I think we've seen some really good moves on some of the key levels we're always talking about. So hopefully you were able to take advantage of some of those because they were pretty clear cut. Have a fantastic weekend, and I look forward to seeing you all next week.